Hey, is a Gold IRA actually worth your retirement money, or is it just another pitch in disguise? A Gold IRA is simply a self-directed account that holds physical gold and silver instead of the usual stocks and bonds. It sounds complicated, but the rules are simpler than most custodians want you to believe. If you're within 10 years of retirement, you don't have time to recover from a bad move or a surprise fee. So let's cut through the noise and get to what actually matters, how it works, the hidden costs, and whether it belongs in your plan. Your dollar is losing buying power every single day, whether you're watching or not. That's not fear-mongering, and that's what happens when a currency isn't backed by anything real. People over 55 don't have decades to rebuild after a major market drop. Gold has held its worth for thousands of years, and it doesn't pay dividends, but it doesn't go to zero either. So the question isn't whether gold is good, but whether a Gold IRA fits your timeline. The account is self-directed, and it holds physical precious metals that meet IRS purity standards. Gold must be 99.5% pure. Silver, platinum, and palladium have their own thresholds too. You can't store the metals at home. The IRS requires an approved custodian to manage the account and an approved depository for storage. Home storage triggers real penalties, and the IRS doesn't treat this as optional because it's the rule. If a company tells you that you can hide gold in your home safe and call it an IRA, they're setting you up for a problem. Setting one up is easier than most people think. You start by opening a self-directed IRA with a custodian who is approved to handle precious metals. Once that is open, you roll over money from an existing 401k or IRA. Done correctly, that isn't a taxable event. Your custodian then buys IRS-approved metals and stores them at an approved depository. But watch out for high-pressure sales tactics and coins with huge markups. Not every company plays fair. You'll also pay setup fees, storage fees, and custodian fees. Those run higher than a regular IRA. Gold doesn't pay dividends or interest. Your growth depends entirely on price appreciation. Fees can eat into returns, especially on smaller accounts. At age 73, required minimum distributions force you to pull money out. That can be clunky when your wealth is locked in physical metal. But if you want real assets outside the stock market and you're worried about inflation, a Gold IRA can be a solid piece of your plan. It's a hedge, not a growth engine. Now, for the real numbers on fees and rollovers with zero fluff, I've linked a free Gold IRA Zero Fees guide in the description. Talk to a specialist, get your questions answered, and make the move before the rules change on you again. Protecting what you've built isn't about timing the market perfectly. It's about making the right move before you run out of time. If you found this helpful, don't forget to like the video, subscribe for more updates, and leave a comment if you have any questions.